Okay, we're live again. Now I am inviting Brian. I just sent you the invite, Brian. Maybe what I should have done is let you send the request to me because that's what worked last time. Okay, Brian Altunia wants to be.
Adding. Still thinking about it. If this doesn't work, Brian, then what we're going to have to do is originate it from your page. This is the craziest thing that I've ever seen. But if you believe in the words of Napoleon Hill's Think and Grow Rich, that with every adversity around the corner, there you are, even though it's kind of frozen and choppy. Can you hear me?
So frustrating. Yes, I can hear you.
Yeah, I know. And we had a couple of people that were on,
I
and
saw that.
I told them I was sign out and sign back in, so
I saw that. So
it is
frustrating,
what it
man.
is. And
I
I hate
don't.
to take a selfish approach, but no, it wasn't my technology this time. It wasn't even yours. It's just Facebook, I guess.
I think they don't like the mobile. They don't like the mobile app, the mobile version of
It's
it
like,
all.
yeah, yeah. But you know what? That goes back to our earlier conversation about actually doing it on a laptop or something. So,
Yep.
um,
It actually made me like turn my iPad sideways in order to have the conversation, which is never it's never done before. Let me try see what happens
wow.
if I do
Okay.
this. If I do that, am I sideways to you or am I upright?
Let me see. Yes, you are.
I'm
You're
sideways. Yeah,
sideways.
we can do it this way. This is kind of fun. Maybe
So
like
come
be like
back.
I'm
Yeah.
be like okay.
And and when you told me earlier that I was sideways, I was
Yeah,
actually sick. I was actually the phone was actually turned side up. Anyway, here we
yeah.
are.
I mean,
So,
technology. Oh, frustrating.
well, we meet each week 2 o'clock Pacific Standard Time to discuss um, the perspective of being special needs, and we say children, really offspring, because they can be 3, 14, or in your case, how old is Jordan now? 22,
24. 20 should be 25 in November.
24. That's crazy.
Yeah,
That's why I always say time is the original gangster. It doesn't care about anybody, and it just keeps on moving.
yeah,
Um, but there's anyone that is watching that happens to be a parent or loves someone that um, has a loved one with special needs, um, by all means, feel free to chime in if you want. And what we're going to talk about this week, today in particular, is the connection between life insurance and special needs. Um, and it's very fitting because September happens to be Life Insurance Awareness Month. Um, and I don't think there will ever be um, a lack of a need for education or awareness with regard to life insurance because it's something that we talk about, but it is as necessary as it can be uncomfortable. And if you think about what it does in terms of um, protecting against the loss of a person's income, um, a tax-free to wealth in some cases, depending on how it's set up and structured, in a world where you have children who have special needs, then it's huge. Because if you take the special needs component out of it, you're still talking about preparing your child for um, a life where you exist only in memory, and that is their independence being something that has not yet been determined, their level of independence anyway. Uh, and it can be twice as difficult to talk about at that point in time. But again, that's when it's twice as important. And unfortunately, in my experience, because Elijah is now 14, he was diagnosed at the age of 3, and today, enough, marks the 14th anniversary of me being in this industry and in this business. And the one thing I've seen is that when a child is in or their teens, and Michael Whitetraub, long time no see. It becomes parents are a little more open to having the discussion, and that's simply because life does what it does. You're older, your children are older, future and everything. Matter is, it's easier to take advantage of it when they're younger, and simply because it's easier to take advantage of getting it when we're all younger. And so there's so many myths that surround life insurance, how it works, and how it works. And there, Dirk says, sound generational asset planning too. Yes, thank you, Dirk. Most people
100%.
aren't aware of that, and most people
Yep.
aren't aware that there's tremendous living benefits that take place with them as well. I had the privilege and honor of calling that a client has a previous policy with, and some of the things that the customer service rep was saying was, I could tell it was the best. Still, there were gaps in there in terms of some accuracies. And then I saw an article the other day that talked about how life insurance are up in certain areas as a result. And it brought up some points which I think are great, which is that no one should go out and, as a result of COVID-19, just go get life insurance. The only reason you should is if you have an insurable need. Now, the question comes into play as to how you define. If you are 21 years of age, you have no children, you have no mortgage, you have no dependents, you have no debt, one might think you don't have an insurable need. Your demise is going to have a financial impact upon somebody else. I dare say that there is, in fact, an insurable need. So each situation varies. They talk about how there's been an increase in it. And some of the things that they mentioned there were things that were either a little less than accurate, or there was vital pieces of information that I know that I was surprised that it wasn't included. I shouldn't say surprised. I was just maybe a little surprised, and at an alarming rate, especially now with COVID, with regard to the underwriting process as well as the application process too. So those things make a huge difference. Go ahead,
Sean.
I was just gonna ask you to chime in.
It's taking sort of a clinical approach. I'm not being critical. I'm just saying that, like, for people just to understand that, first of all, September's Life Insurance Awareness Month. So part of our mission, anyways, is to make people aware of how life insurance can work. But to your point, I mean, life insurance can be used as a financial vehicle for a whole bunch of things. The reality is that most people don't think about life insurance as a vehicle other than to protect their family in case they die. And so the term insurable need and all of those other things come into play if you're looking at that only when you die. And the reality is, life insurance can be used for a whole bunch of things. A combination of life insurance products can be used for a whole bunch of things. And it all depends on what the individual is looking for and wanting to accomplish. So again, I just wanted to make it less technical, a little less clinical, and just engage in conversation, just so that, just boiling it down to the basics. Most people don't even understand. They hear insurance, that with their images of insurance, it's very typical of what you would say is a term insurance policy, right? I die and my family gets money from the insurance company, right? And you hear all these commercials on TV or on the radio, a 50-year-old man can get $1 million in insurance for $15 a month. And that's right. That's sort of the message that's been put out there in the world, right? And that's one understanding of insurance, but that's a limited understanding of insurance, right? So to your point, when COVID-19 has created a lot of uncertainty, of a lot of illness, pointed out, you know, there's some craziness going on in my building. I'm not sure what's happening, but noises all over. But it's creating an interest in insurance, right? So let's talk about a couple things, like the difference between, and some people say, well, the alternative to term is whole life, right? So they only think that there's only two kinds of insurance, right? Term life and whole life. Say that again?
Right.
Let's talk about that.
I said most people think that, and in the yeah.
No,
Go ahead.
I want yeah, the difference between term and the real, it's term and perm, right? It's term insurance or permanent, of
Right.
which whole set of permanent life insurance.
Part of one.
Right.
Right. So it's umbrellas. You have term and permanent. And term is for a term. It's temporary. And the term is either 10, 15, 20, 25, or 30 years for that term, which is typical. And it costs less up front. So it's very attractive. And it's better than nothing. And that's what I started out with as well. And there's a common theory that one should never have anything other than that, because permanent products are expensive. And even though some of them can generate cash value, the cash value is not all that high. And you should go ahead with term because it costs a little less. And that reputation is well earned because that was the case once upon a time. But when people think of permanent, they think of whole life, where those things typically do apply.
Yeah. I just wanted
go
to
ahead.
just, so I love this, and I'm hoping that you're cool with us and engaged as well. And listen, I don't know if the audience is gonna care how we interact here, but for the hell of it. But you made a comment which is very typical of most people when they think about insurance. You say, well, a permanent policy is more expensive, as if it's an expense, right? Our car insurance exists. It's a monthly or quarterly or an annual expense. By law, we have to have in order to legally drive on the streets, right? So it's an expense unless you need it, right? And if you need it,
Right.
it's a thank God, but it's an expense where you have your car insurance in case you get into an accident, your car gets broken into, or still something stolen out of it, or you accident stolen. What's the third one? It's funny, I talk about this every day. Car or what's that?
Accidentally stolen, is that what you're saying?
Yeah. Well, broken into or an accident happens, right? Or yeah. But the reality is, you could own your car for 20 years and never have any of that happen, right?
Right.
So it's insurance in case, right? In case something happens, in case it gets stolen, in case it gets broken into, and in case you get into things, right? In case, but you could have it, right? So term insurance is the same thing. Term life insurance is if you die. But here's the thing: it's not in case you die. We're all going to die. Like, it's not like
it's when.
It's not in case you die. It's when you die, right? And so it's inexpensive because it's temporary. It's there in case you pass away. And if you're young, it's really inexpensive. Then if you're older, for the same. But permanent insurance, the premiums are higher, and that's where people think, oh, it's more expensive. This is the point that you're making. It's more expensive because the monthly premium is higher, but a portion of that premium that you pay in a permanent policy is going into an account name that actually grows in cash value. So if you look at it, like if I were buying, go ahead.
I was just going to say, where people make that distinction, where people usually make that distinction, or a lack of distinction, permanent, because they then have a blanket with permanent and they think of whole life. Whereas when they're thinking, including indexed universal life, which is where there's some features there and things that that most people don't know anything about. And then most people think of cost versus value. Cost and value are obviously two different things, because if we talk about cost, that simply looks, value is like, okay, but what am I getting back? And most people just simply don't think of that. And the other thing is, term obviously has its place as well. Like I said, when I began 14 years ago in the industry, that is exactly what I got. And as a matter of fact, quite recently, about a month and a half, maybe 2 months ago, I got another term policy because I needed some coverage. But in the middle of that is not just permanent coverage, but index universal life. So as you were alluding to, you're talking about a portion of the money paid each month going to the cost of the insurance, a portion of it going into a sub account where it has the opportunity to mirror the best performance of the market. And should the worst performance take place, that doesn't occur, so therefore the principal is protected. And
Yeah,
that's
let's
pretty tough to beat.
but let's just, again, just for clarification,
Yes.
permanent policy includes, there's a number of options that qualify under permanent policy. The main difference, there's several differences between the two. Term, as you said, the longest term you can get is 30 years, and then it ends. And if you renew at the end of the term, it's often more expensive because you're older and it becomes a larger expense. A permanent policy is intended to last your entire life. So there's no term component to it, right? So, if you will, based on you living to be 100 or 110 or 120 years old, right? And then they kind of backdate. But there's several. There are 6 or 7 versions of policies that fall under a permanent life insurance policy. I'm just telling this from an education perspective since it's Life Insurance Awareness Month, right? So there's whole, there's universal life, there's variable universal life, there's fixed indexed, universal. Like there's a whole bunch that qualify under permanent life insurance. And the reason why there are variables is the way the insurance companies design those individual products. It's what they do with your money when you pay that premium, and how they invest it. And just so everybody knows, an insurance company is a financial institution. I mean, insurance companies have been around for 175 years or 180 years or 200 years, right? Landowners had insurance before anybody even really knew what banking and, really understood currency, like really, you know what I mean? So it's a financial institution. And what those financial institutions do with your money is they take that and they invest it. Now, the cool thing about insurance companies is they're guided by very strict conservative rules and regulations and where they can invest that money, as opposed to the auto insurance, homeowners insurance, other term, aspects, elements. There's the regulations require the companies that deal with those just to have enough reserves on hand to pay out policies if it's needed. But permanent policies, because they're intended to last, your whole life, the insurance companies are allowed to take that money and invest that money. In fact, it's called tier 1 capital. Money at an insurance company is called tier 1 capital. Banks have trillions of dollars invested in insurance products and insurance companies because it's the safest. It's the safest capital that exists, right? So, what's that?
Some would say safer than an actual bank.
It is. It's where the banks put their money. I mean, you can put your money in the bank, or you can put your money where the bank puts its money, right? So,
Absolutely.
So now going back to what so in the early days, whole life insurance policies were intended to be, everything was kind of fixed and flat premium for your whole life, and you were given a that sat in the cash value component, and that was it, right? And so people thought it was expensive because the premium was higher, even though it lasted your whole life, and the returns were fair, right? So in some cases, they would fix that. They would get a fixed interest rate that got applied to that money. And so, which was great, except in the 80s when the stock market was, flying, people were like, well, why am I putting all my investment money into an insurance policy when I can get 25, 30% in the stock market runs, these massive stock market runs. And so they said, insurance companies then, they had some variability, and so they created variable policies where you could put it and it would ride up and down with the stock market. In fact, they invested your money in the cash value account directly in the market, and so it was up and down. And people were like, oh my God, I could lose money. And then they came up with years ago, which is what you're referring to, indexed universal life policy, where the word universal means flexibility. You can create flexible contributions. It's not the same flat amount every month. It's set at a flat policy, a premium amount every month. You can actually increase it. In case of hardship, you can reduce the amount that you pay. You've got some flexibility in the contribution. But the index component, which is what you're talking about, which I definitely want you to talk about some more, is the market. You've got some principal protection. It's kind of a hybrid of a fixed and a variable, and it puts something in the middle. So go ahead, and I didn't mean to cut you off. I was
No.
The conversation. So talk about universal life. I just wanted to give everybody the bigger context, and then talk about universal life, because I will tell you, I love universal life.
Yeah, because we'll talk about that, and then we'll shift over to what does that have to do with special needs? How does that apply?
100%.
Well, with the index universal life, like you mentioned, you've got a portion of it going into the actual cost of the insurance, and then a portion of it going to the sub account. And the performance in the sub account mirrors one of several indexes, but you're talking about a floor of 0%, and then a ceiling, depending on the product and the company, 13.25 or maybe slightly greater. And so what that does is, and then you have an average that, somewhere maybe in between the middle. And then when a floor of 0, if the market turns upside down, there's nothing that's lost as far as the principal goes. But then you've got that money that's going in there, and it's tax advantage. From a compliance standpoint, I have to use that term as opposed to tax free, because the money can be withdrawn in a manner that will cause tax consequence. But there are clear provisions that are made for the way that these policies are constructed, where you can access the money without paying the taxes on the growth, quite legally, to say the least. And so what happens is, because the education as to how these things work is very limited, and there's some bright minds out there that don't know about these things.
For sure.
But they do. That's the thing that I more and more, that there are professionals in related industries, and some CPAs and things like that. You have conversations with them, and they have no idea how these things work.
Yep.
And but because they can be built into
CPAs who are there to help you with your taxes don't understand the positive tax permanent life insurance. It blows me away that the tax experts don't fully understand how these things work. It's crazy.
And we could have a whole conversation about that, but that goes back to the manner in which financial education is taught anyway, and more importantly, the manner in which it's not taught, because it's not taught in schools. Kids find out how to balance a checkbook by bouncing a check, not by balancing a checkbook correctly.
Right, for sure. For sure.
That are even in certain sectors and in certain industries, that stuff isn't generally taught. The policy that you have, especially when we're talking about permanent and index universal life, the policy is only as good as the agent that markets it, because what that person does is they're constructing it, and the way that it constructed, will dictate and determine the manner in which it serves the client. So if it's not constructed properly, it can actually be set up in a manner that is a detriment. But anybody that's doing a thorough job will make sure that that's one of the pieces in the entire wheelhouse, and then make sure that it is constructed in a manner that meets that person's specific and individual's needs. So for those that are watching, Brian, touch on this, and I'll be happy to add my 2 cents as well, as to how this information pertains to families that have members with special needs. Because some people are just, they're so focused on today, they're not thinking about tomorrow, even though that day is coming when they exist only in memory. It's just tough to focus on. And then there's a matter of a lack of knowledge that we talked about as well. How does some of this stuff pertain to the special needs community in particular, and how can it benefit them?
Well, there's,
Us.
yeah, it's a big question. So let me answer that by saying a couple of things. Touching on what you just talked about, agents who are really taking care of their clients understand the full picture of what clients are trying to accomplish. If they're really doing their job, they really have a full understanding of not just the insurance component, but how the insurance plays a role in the overall, the overall structure of the family, of succession after somebody passes away, and all of those elements, right? So just in general, initially, coverage of any kind is always a first, right? For any family, should be the first goal, right? Make sure that something is in place that provides for the unexpected, right? Provides protection for the family in case of the unexpected, and whether that's a term policy or however that's put together. That's the first thing, that there should always be coverage. The second thing is when you're looking at a permanent policy where the cash value has an opportunity to accumulate and grow based on market performance and based on other factors. That money that's accessible to the family for a variety, whether it's for payment for resources, educational support, all those kinds of things. Life insurance, permanent life insurance, can be used as an addition. I don't want to say it's like becoming your own bank, but by the way, there's a book called Becoming Your Own Bank that talks specifically about life insurance, but how life insurance can be utilized as that cash value can be utilized by the owner to pay for things. There's no restriction on how that money is utilized, as opposed to, for example, a 529 account. A lot of people think about educational accounts being a 529 account, where that money can only really be used for educational uses. Cash value in life insurance,
books,
right? Cash value in life insurance, that cash can be used for anything. Separate note, really quickly, I just got tagged by one of my clients who's just bought a home in a condo in Nevada, just opened up escrow, and she's pulling $25,000 out of her life insurance policy to be the down payment on her house. And so life insurance, the cash value can be used for anything. When it comes to special needs, and families dealing with special needs, and we talk a lot about this, even though it's a legal concept, a special needs trust, where special needs trust exists with a directive on how a child with special needs is dealt with, a funding vehicle for a lot of the activity that occurs in the trust is one of those things that we touch on. If you have an underage child, that child cannot be a beneficiary in a life insurance policy. You couldn't have a life insurance policy on yourself and name your minor child as a beneficiary. You can, however, name the trust, and in the instructions of the trust, how the proceeds of that life insurance go to, and this is for every family, not just a special needs family, how that the trust dictates how the proceeds are utilized for the benefit of the children. In a special needs trust, it's another vehicle where the trustee of the special needs trust has instructions on how those proceeds are to be used to maintain and provide support for special needs resources, to make sure that child has the resources and the wherewithal to be able to continue their life and service and protection and support for the rest of their lives. Right. So that's one of those things where, when you really look at where the money's going. And the other thing we should talk about is that death benefits of a life insurance policy are income tax free to their beneficiaries. And so while you're putting money away, it's funny, I will have people say, well, man, $250 a month for a life insurance premium, it seems like a lot of money. And I will say, well, like relative to what exactly? Because if you think about it, let's just brass tacks here, and then I'll shut up and you can throw your 2 cents here. But is $3,000 a year, right? $3,000 a year for a life insurance policy. And let's say that month for I don't know, depending on your age and circumstances and health and a few other factors, let's say that's a $2,000 a year. If you paid it for 10 years, you will be paying $30,000 for your family to receive $1 million income tax free, right? Even if you paid it for 30 years, it's $90,000 for your family to get $1 million in free death benefit. Like, you really have to go a long ways to go, how could this not be worth the impact? And by the way, that's $250 going where a portion of that money is going into an account that is available to you while you're alive. Cash value as it grows, still have the $1 million in coverage, but like my client who's going to borrow $25,000 to put a down payment on a house, is borrowing that like a second on a house. She doesn't have a tax implication for taking the money out of her life insurance policy, other assets. So there's so much value that when families look at, that's why I said it's not you can't look at it like an expense. You have to look at it like it really is a significant investment in your future. While you're alive, you can access it. If you get sick, if you put long-term in there, it covers that. And when you pass away, your family gets access to that as well. So those are the things that you're acquiring with a permanent life insurance policy. I don't know if I answered your question specifically. As flexibility, because there are some accounts where having a certain amount of assets could put you over the line of receiving benefits. Yeah, but life insurance proceeds do not qualify for that.
Generally speaking, I think in some states they might, but that goes back to what we were talking, which is the value, not the cost, but the value. Because value and cost are two different things, and cost is really an issue if there's an absence of value. But the value of the policy is strongly determined, really ultimately determined by that's putting it together. Because in a case like that where there are benefits, let's say that you have a special needs receiving Social Security and the family is in a situation whereby the absence of that Social Security is going to cause some financial hardship. That policy needs to be constructed in a way in tandem with the Special Needs Trust to make sure that those benefits, not only that they're not affected, but that they work in concert with the policy to strengthen the overall financial foundation as opposed to damaging it. And that, again, is why, everything is dependent on who you're sitting down with. Companies matter, but not half as much as people do. And those are things that really make a big difference. And again, each case is completely different. So some people are hearing this, and I know when you threw just the example out there of $250 a month, somebody will hear that and just be like, well, wait a minute, that is a lot. I understand what you're saying, but that does seem like a lot. That's a round figure that's just thrown out as an example, but each situation is completely different, even within a family. Talking about health, age, gender, a bunch of different things in addition to what a person's financial picture is, what they can afford to do per month. So that's the other reason why if you're sitting with someone, which is why I'm proud of the way that we work, which is, okay, you're looking at what somebody's budget is and a recommendation of which life insurance is one part, but making sure that it then fits that budget to get to that to the goals and dreams that they have. And in our realm, as far as parents to children that have special needs, again, you don't necessarily know what the future holds in terms of a level of independence. And while you're trying to figure it out, time just keeps on rolling. So you might as well have something in place. And I know that I'd be lying if I said that we have everything figured out, because as Elijah gets older, like I said, he's 14, which is still kind of so weird to think of. As things continue to evolve, what you have in place has to grow as well. And I don't know if we'll get to a point where we ever have it all figured out. I think the only way I'll have it all figured out is when if I can get to the future and I see his independence. completely fine and all on his own. Unless I can get to the future and see that, I don't know if there's such a thing. But I know that we're closer to that each day because of the use of many different instruments and vehicles with life insurance. So, and I know that's a concern that, again, like I said, a lot of special needs parents have. But it's as I said, is as important and as necessary as.
Yeah, and listen, I think that everybody should understand that as their situation changes, you know, when you're first looking at this, if you're a brand new family, just recently married, for example, your situation is going to change as you buy a house, have children, you know, and your life changes. The life events that you encounter have an impact on your, you know, on your overall estate value, if you will. And so if you started out with a $100,000 life insurance policy, you know, that's going to be okay. But if you have a large estate and you've got a mortgage and kids' education and other things that you know, that your estate is now taking on, $100,000 doesn't make a lot of sense. You're going to want to increase that coverage, which, by the way, gives you the opportunity to increase some financial value as well. We use it, I think, as one of the viewers put on here, you know, I consider it a wealth generation tool. When I spent a lot of time in corporate America, and Fortune 500 companies utilize life insurance policies for executive bonus programs. People don't understand when a CEO leaves after 5 years, how do they walk away with, you know, millions and millions of dollars in stock and, you know, cash, but they also walk away generally with a life insurance policy with a tremendous amount of cash value that the corporation has paid for. And then they hand that off to the executive as a, you know, as a bonus. And so the value of that, people have to understand, like the cash value as a wealth generation tool is something that every family should look at when you look at your options, because the reality is, Sean, like where are people putting their money to grow and provide economic growth and economic wealth? They put it in the stock market. Stock market's going to do this, you know, and while we've had some great years where it's been up, big corrections coming, you know, that's the word. And so,
because for most people, the layperson, the most, you know, the most common
average
person,
average American family, yeah.
Yes, right. Most people will think of the path to wealth as, and I have never seen this on a stat. I just think this is what I hear most people say. You would probably agree. Inheritance, lottery, or real estate. And the first two don't apply to almost, you know, to most people. But the third, the latter, most people can get at some place, right? There you go, Dirk, key man at life insurance as well. So then tell me this, tell us this. For most people, especially because prior to us working together, part of your background was in real estate. So for those that think that real estate is, and this is not to have a shot on, you know,
For sure.
take a shot at real estate, because most definitely, you know, I wouldn't own any, we wouldn't, if I didn't believe that it is a wealth generator, because it is. But there are people who swear by it so much so they believe that it is the end all and be all. Why don't you compare a little and tell us about how life insurance as a path to wealth for one that doesn't have it compares to real estate as a path to wealth for one who doesn't have it, and then compare that to the idea of both being put in place.
For sure, for sure. I just want to respond to Dirk one quick second, because here's the interesting thing about Keyman Life Insurance. And yes, absolutely, it is something that.
And just before you continue, one quick second, I want to give Dirk a shout out, because it's like Robert, who was on last week, while he lives in, I believe, in Florida, he is a fellow U.S. Virgin Islander like myself. So people that are on from home, it means a whole lot to me. Sorry, go ahead.
Okay. All right. I love the fact that we're getting Virgin Islands, you know, showing up on these. This is fantastic. But I wanted to say the interesting thing about Keyman, and again, just so you guys know, I spent a lot of time in corporate America and in the financial, you know, in the finance side. Keyman Life Insurance doesn't benefit anybody but the corporation, just so you understand. The Key Man Life Insurance is a life insurance policy that the company pays for on the life of a key man, a key woman, a key person, that if that person dies, money comes to the company in order to provide stability and to hire a replacement. Key Man Insurance is not intended to protect the executive's family. It's intended to protect the corporation from the passing of the founder or a key executive. Imagine, Michael Eisner when he was at Disney, right? Or visionary, some people would say Zuckerberg. So, obviously anybody who was like the visionary, the creative, Steve Jobs, like the loss of a key founder, a key executive could be significant. And investors in a company that are following a founder's vision would be theoretically financially impacted if something happened to that. So a Key Man Insurance policy, based on how much that executive is being paid, it's to protect the corporation so that they can find a replacement and keep things moving forward. So just wanted to clarify that, but it gives you,
And those
it shows
in place for smaller businesses too.
100%. And
Right.
so so the thing that people should understand is that this is why I love this stuff. By the way, I get kind of fired up about this stuff, but life insurance is it's an amazing tool, because life insurance is sophisticated. It's used for key man protection. It's used for if you have 3 partners in a business and one passes away, and if that person had been married, well, guess what? The 2 remaining partners are now in business with the surviving spouse, who may not care about the business, who may not get along with the 2 founders, whatever the situation could be. And so buy-sell agreements that exist on a legal basis utilize life insurance as the financial tool to be able to satisfy, like, again, if that one partner passes away, that there's an agreement that exists between the 3 partners while they're alive, that should one pass away, the remaining spouse is paid a certain amount of money, which would be the equivalent of a third of, or whatever is the percentage of the business, for there to go away and the 2 remaining partners to absorb the other partner's ownership and split it up, right? So a legal document that has the support of life insurance as a funding vehicle. Trusts for special needs families falls the same category. It's a legal document that exists where the life insurance is the funding or the financial vehicle to perform the activity set out by the legal document, right? So just wanted to talk about that. And again, I never thought I was a geek, if you will, or a nerd around life insurance, but I love it because it can completely change a family's business succession. It can change a family's estate. It can change it. To go to your point, my folks were big in buying real estate, really big in buying real estate. And I was in commercial real estate for a while. My mom was a principal in commercial real estate for 30 years in Southern California. I know that market fairly well. And I would agree that real estate definitely has tremendous value when it comes to building family wealth. But Sean, this is the reason why, if again, you have to look at it, like, there's plenty of plots of empty land out in the Mojave Desert that are for sale if you want to buy that. That doesn't, right? It sort of depends on what the person's long-term view is, ultimately what they're trying to accomplish, right? Because I could buy a piece of cheap, desert land, and I said literally very, very cheap, but I got to sit on that probably for another 40, 50 years, or maybe the bullet train between LA and Vegas gets built, and there's some value to that property, but that's a long-term hold, right? Just buying real estate, a piece of real estate as an asset, you can't look at it in a vacuum. It has to fulfill the need of a family's wealth portfolio. So if you provides a monthly return, a commercial piece of property where you've got tenants and they're paying rent, or even a residential, multi-unit residential property, that you've got income coming in that pays the mortgage and then some, right? If you're relying on monthly income coming in from your real estate properties, some people just go and acquire single family homes and then they Airbnb. Again, if that's part of your family's wealth portfolio, hey Robert, I didn't see what he said earlier, but right, if it's part of it, real estate could be a phenomenal asset. The challenge with real estate is, and honestly, I will tell you from a former agent's perspective, the in real estate are not deals that are advertised. The best deals on the market are
Right.
never put out there for the average person to if you do, you're lucky. But if there's a really
wise, right,
commercial or residential, the best deals that are out there, if there's a piece of really a tremendous upside potential, I guarantee you, agents and the brokers, and they call them pocket listings if they make them available. Those are the folks who are picking up those pieces of property. Not getting, it's kind of look at the stock market. The upside in the stock market is for those who got in early, right? Or when the stock was undervalued and they were able to see the long-term upside value, you know, with some knowledge of the industry or the company, right? You have some knowledge, but the reality is that, you know, the real estate, if you have really, really good deals, are often not those that are advertised on the market, right? Which is where negotiation comes in when you're going to go acquire a piece of property and all that stuff, but it has to fit in with the portfolio. The real estate, I think real estate's it is great for a lot of people. They like it because they can put their hands on it. It's tangible. It's an asset that they can walk in the door. They can see it. You know, there's an address.
And they understand it more so than they do life insurance.
Yes, because it's life insurance is you're relying on the insurance company's warrants and representation that the product is going to perform the way they think. And the reality is, and rules and regulations around life insurance. Insurance companies are limited in what they can talk about as far as upside potential. They can't actually tell you exactly, because nobody has a crystal ball. We can't tell you exactly how it's going to perform. They tell you how they think it's going to perform. They take a very conservative approach, and even that conservative approach is regulated by, you know, by like insurance commissioners of every state. You can only tell people so much, right? And they always say, right, past performance does not dictate future values, right? Future opportunities. So that's why people feel like, oh, life insurance, I don't get it. I don't understand it. So they have to have a lot of trust and faith, and they have to understand it. And that's why I love the company we work for, because our focus is on education and awareness and providing that support and providing access to those resources where people can find that out. And I think, you know, everybody's grown up in a home or an apartment, like they've grown up in a piece of real estate, so they understand it from a utilitarian perspective. They don't always understand life insurance. But I would say this last thing, and then I'll shut up. I promise you. I know I talk a lot. We talk a lot. The two of us talk a lot. That's a problem for the two of us. We talk a lot. Yeah. But the reality is, during the Depression, and this is important because of what's going on in the world right now, where we're, you know, really the impact of. It's not just our election in November, although it does have a bearing on the overall global financial, you know, economic perspective. But the debt crisis around the world is going to have a long-term impact on, you know, on values, market values. During the Depression, Walt Disney accessed the cash value from his life insurance to keep Walt Disney alive. So did J.C. Penney. There are a lot of companies where the owners had a lot of money in cash value life insurance and were able to access that cash value life insurance to save their companies, to save their families, to save, you know, to save them while they were still alive. And so it's a safe haven, right? It becomes a haven for protection of your money and your family's wealth. And for businesses, it's a resource that you can tap into. It's an asset listed on your balance sheet. Like, you can tap into the cash value and utilize it to help keep the company afloat during times like we have right now, a pandemic, where your choice is shut down or scrimp and save until you can keep up things alive until this is over, and nobody has an end date when it's all going to be over. So,
and those examples that you gave too, because we're talking about the Depression and going that far back, the products and what people had at their disposal pale in comparison compared to what is available now, again, which most people don't know anything about. And I appreciate you explaining that, you know, too. So getting back to, again, before we wrap up, the connection there between life insurance and the special needs community. I'm sure what we found, both being in the industry and clients as well, is the best time, I was telling somebody about this earlier today, the best time to consider getting life insurance is now, regardless of whenever now is, simply because you don't have a guarantee to where your health is going to when you're leaving the planet. You only know that you are, and it's not something that you need like eventually, unless you're already in a situation where your departure is not going to have a financial impact upon other people, even if you don't own a home, even if you don't have any children, even if you're not married, then it's incumbent to have something in place that takes care of that. People will like to turn around and, do GoFundMe's, and depending on where you are, those things are actually taxable too.
For sure.
And I also don't want the message to be missed. We're not sitting here talking about how great one form of life insurance is versus the other. We're simply talking about what people don't know about cash value life insurance, especially index universal life. But a term policy has its place as well. Like I said, when I got
100%.
started, that was the very first thing that I got. And some is always better than none, because at the end of the day, we are irreplaceable creatures. We are the most, despite the fact that right now you would think that we forget that, especially when you look at the way we treat each other. And so we will never be replaced. However, our income can always be replaced. And I've always thought prior to being in this industry of how great it is to be able to have something to, and actually, to my wife's credit, it was a very limited thought. And then and Robert, to answer your question, you mentioned whole life. Whole life is one form of cash value. We were referring to primarily index universal life, which is and I think I can speak for Brian, in a humble opinion, it's a superior product. The bad reputation that permanent or cash value has is based on what whole life especially used to be. Even though it's evolved, it's still in the Stone Age compared to what index universal life. I just thought about the importance of having something in place so that it doesn't affect anybody when you're gone. I never stopped to think about being able to tell a boss, look, I know that I get X number of days for bereavement. I'm going to need more time. And when they say, well, how much time? To be able to say, I don't know. I'm going to take as much as I need. And if you're going to do what you need to do, and that means letting me go, then that's okay. Because believe me, I'm going to do what I need to do. You can't put a value on that. So if you talk about that, and then being able to grow something that grows at a decent rate of return, and then is, you're not paying taxes on the growth, provided that it's set up the right way and accessed the right way, that's tremendously invaluable. And that becomes twice as invaluable again to the special needs community, because we don't know what level of independence our children are going to have growing up. But I think we're just about out of time. I think this is probably the fastest hour that we've ever had. I think
I can't even believe an hour is over. Oh my God. I can't even believe it's crazy.
But I want to thank Robert and Dirk, particularly my fellow Virgin Islanders, for checking in. For some reason, in response to just seems appropriate. Thank you. Anybody has any questions for anything we didn't cover, by all means, reach out. And one thing we're going to try and do is make sure that we engage more between now and next Wednesday. So we're letting everybody know, but encouraging you to give us, to have discussed any topics or anything like that, and feel free to chime in and ask any questions. We want to grow this thing organically, and we'd like to get to a point where we're doing maybe a day here and then a day over on Instagram, and just impacting as many lives as possible. Thank you so much, Dirk. That there are more people out there that probably need this information than there are those to provide it. We're looking to do something about that nationwide as well. So by all means, reach out to us if you're looking to do something like that, diversify your income, and maybe you want to, wage war on mediocrity, because that's exactly what we're about. And life insurance is just one of the tools in a utility belt to go out there and make those things happen. So thank you guys so much, Brian. Thank you so very much.
Thank you, buddy. You too.
And we'll see you guys next week, 2 p.m. So much.
we're gonna get our technology figured out. We're gonna get the technology figured out, and
Yes.
and we are gonna. I mean, at the moment, we're talking about branding this Two Dads because we are both fathers of children with special needs, and so we're gonna be doing some branding around this, and we're gonna get the word out. So if you want to spread the word, join us next Wednesday.
Before we go,
Yeah.
yes, Yvonne, different parts of the globe. Yvonne Fandian is in our firm as well, and she is up in Canada. So thank you very much for tuning in, Yvonne. And Dirk, again, thank you, Rob, thank you everyone that was on. Again, have a great day. And like we said, we haven't even, it was just two guys talking. We haven't come up with a name yet up until today. But as Brian said, we're looking at Two Dads. That's as simple as it gets. And the technology. So will the
We'll figure this out.
broadcast. Thank you so very much. Love to hear. Okay, thanks.
Thanks, everybody. See y'all later. I love this.
All right.